What they're doing is they're moving into fixed or finite supply assets that they view are going to have more demand. Enter Bitcoin, enter silver, enter gold, but no one talks about copper, nickel, lithium, cobalt. Those are fixed / volatile supply assets with massive demand curves. Last Friday, you saw the head of the EU come to the White House and meet with Biden about ensuring that they can align on sharing incentive from the Inflation Reduction Act for European-based businesses so that the VWs of the world don't shut down German plants to build US plants, as well as those nations in Africa, quite sadly, are not E, S, nor G. If China has this supply and processing capacity and they can price fix those commodities, they can produce vehicles cheaper than we can, which means we will be driving Chinese vehicles because we will be unwilling to pay $20,000 more for a US vehicle. Chemical compositions of the underlying batteries necessary for those different use cases have different ratios of lithium, nickel, cobalt, manganese, whatever it might be. And so what we do is we weight our portfolios based on those different demand drivers and the different use cases of volume based on what that drives is per kilogram demand of the underlying commodity. And as important as EV, there's over $4 trillion committed by global governments to carbon neutrality and going green, which, by the way, is a greater figure than every human endeavor ever undertaken.
Yeah. Today in Marcus Policy, we have a good friend, a fellow Massachusetts Irishman, Will McDonough. Will's had a very storied, diverse career, everything from sports and marketing to banking in Africa to a little crypto. But I think what you're doing now is probably the most interesting and by far the most important thing that you've done for a long time. Why don't you tell us about EMG Advisors first, and then we can get into the path that brought you to this.
Yes. So EMG Advisors is an investment advisor that we launched in Q4 of last year, and we took public on the 28th of December under the ticker CHARG, CHRG, on the New York Stock Exchange, a lithium, nickel, cobalt, and copper investment vehicle, basically giving retail and institutional investors the ability to participate in our predicted future price activity of those core 4 commodities that are the base layer of all future green tech, any carbon neutrality, any EV, any solar, any wind, any of that has various variables, but they all require the same core commodities that we believe are in volatile supply and are in massively rising demand. That's why, we built the product over the course of the past couple of years and are very proud of getting it into the market here at the end of last year.
Yeah, and I think it's clear that we as a society, not just here, but globally, we like electric vehicles and we want to transition to it. But I don't think the average person understands what goes into a battery, and not even just cars. Like our weed whackers have to be battery powered now, and just how much of that kind of components, especially the rare earths, come from China.
Yes. China's done a brilliant job over the last long time of getting ahead of this curve and going out and securing offtake agreements or the physical metals necessary to build these batteries all over the world.
Yeah.
You referenced my experience in Africa. In 2013, we did Bob Diamond and I, the former CEO of Barclays, did a SPAC, which was before people knew what that meant.
But it wasn't a bad word.
Yeah, it's come full circle. But we did an $825 million acquisition company and bought banks across Africa. And I love telling the story because it was really jarring to me that I landed in Harare Airport in Zimbabwe. And as you walked up to customs, there were 2 lines. To the right was, British English, if you will, and to the left was Chinese lettering. And so here I am in South Central Africa, going into a troubling economy at the time, and realizing that the Chinese have been there for so long that they have their own lines of security. And we were coming in there thinking, we're ahead of this curve and participating in some growth story. And China had already been there for a long time and had already bought anything that wasn't moving. Most recently, there was a piece of news where Zimbabwe outlawed the export of lithium, and it got some global attention because they do have strong lithium reserves, but they realized that by allowing it to be exported, more of the value chain gets exploited in other parts of the world, and they lose out on that margin. Well, I thought that was great, and I was so proud of them for making that move. And then I went and read into the law and realized that they carved out anyone that was existing as already operating there.
Oh, wow.
So basically, like, the PR value was great, but the reality of it is they just created a moat around the Chinese companies that were already there. So you're right, Chinese assets, if you will, control 58% of the processing of lithium, 35% of the global processing of nickel, 40% of the global processing of copper, and 65% of the global processing of cobalt, which is ironic because 69% of the global supply of cobalt comes from, as we call it, the not so democratic Republic of Congo.
Yeah, well, I think that's a really
volatile
important
supply
point.
chain.
Yeah, that it's one thing to dig this stuff up, and especially with lithium and cobalt, that's kind of concentrated in some areas. Rare earths are kind of everywhere. You just have to be able to dig them up. But there's only a few places on Earth that can process them, and the United States is kind of not one of them.
Well, there's a reason why they're kind of not one of them, and it's because it's very environmentally taxing.
Yeah.
And the US has just not shown that they're willing to take that one step back to take those two steps forward. There was a crazy story out of Minnesota last month. Within the same calendar week, Minnesota, through the national government, the US government, made it illegal to mine rare earths and critical minerals in what is classified as a national park up in the northern corridor of Minnesota. Within 6 calendar days, unrelated but ironically related, the governor signed a bill stating that all energy will be created from renewable sources in Minnesota by 2030. And so you have this politician standing up and on their soapbox saying, we're gone green and we're definitely doing this. But then, oh, wait a minute, not in my backyard. You're not doing that here. I'll buy it and I'll use it, but don't you dare dig it here. Don't you dare produce it here. And so and then when you look out at, kind of the pipeline of these assets coming online, which also, if I found lithium in my kitchen, it would be 8 to 12 years before that was in a battery. It's a very long production cycle. Forget about the environmental impacts. When you look at the supply chain of where these things are coming from, not only is it internationally from non-democratic places,
right,
where, their governments have really said, we're going to own and control these assets. But onshore in the United States, they're from largely Republican states.
Yeah.
And unless there's a Republican governor, nothing's getting approved and nothing's happening. And even when that's the case, there's a very slow arc to permitting and approvals, which is why we're losing this battle to China and why we think it's a geopolitical issue of the next decade.
Yeah, I 100% agree on the national security issue, because China kind of has it both ways. We're irrelevant of national security for China. They're transitioning to EV also. So they need as much as they can possibly have, where they've kind of stopped exporting to us. But then it's also a great opportunity to hamstring us in that battle. Yeah.
So we call it the energy expansion instead of the energy transition, because it's not like we're ridding ourselves of need. We still need oil and gas, nat gas, all those things are still going to be around. But as our population grows and our economies grow, we need more sources from which we can get energy. And China has shown a willingness to not, oh, by the way, how did it work out for Eastern and Central Europe to have single sole dependence on Russia for their oil and gas? China's ahead of the curve again, where they've gone out and said, we need energy independence. And because we don't have enough of this stuff for our own self-consumption, we're going to go make sure we got it. And they have it. But to the geopolitical point, what happens if they choose to either stop exporting the goods, which Indonesia's done, the Philippines have done, said we are not going to export it, or if we do, we're going to tax it heavily for any of its exports. So basically make it 20% more expensive for the rest of the world to touch it. Or last month, China also shut down lithium production in China for 30 days and sucked 13% of the global supply of lithium out of the market overnight. And so they've shown a willingness to manipulate the price. They've shown a willingness, to hoard supply. And our entire green future being dependent on them as the source is very nerve-wracking, which, oh, by the way, is why we put in place an investment vehicle to participate in that unbelievable volatility paired with rising massive demand.
So that's what I want to ask you. So we talked a little about the government clearly as a bureaucracy understands this as a problem and is all for it. But especially the way we are as a democracy, but also as individual states, we just have a very inefficient system to tackle something like this, where China, which is a totalitarian state, can just say, you're allowed to dig this up. But what role are you finding financial markets are playing a role in this? Is money coming into the space? And because it is a bit of an esoteric space. We kind of stopped mining 100 years ago, so there's not a lot of experts out there that know a ton about it, and there's not a lot of public companies, so you don't see a ton of mining experts. Are we getting around to finding the private capital to make this happen?
The private capital understands the thesis. And the private capital, I think, has been restricted to the vehicles through which it can play the thesis.
Great
so
point.
If I looked, you referenced how this whole business launched. John Raymond, my co-founder in this business, and I were actually at the White House back when our mutual friend Gary Cohn was at the NEC, and talking to them about this exact issue 5 years ago, saying the world needs to wake up, and this is a problem that needs fixing, and we need to put systems in place to incentivize onshore production, which we're very excited about what the Inflation Reduction Act, could mean for that. And not, that I think that's an important attribute here. But you'll remember famously President Trump at the time tweeting that the U.S. should buy Greenland, which was quite comical. But
it was the thing he got made fun of most, but it was actually probably his best idea as president.
Yeah. Well, the reality of it is think about that, where the U.S. president at the time looks out as what's the opportunity for us to secure this, and it's acquiring a neighboring country. But that's neither here nor there. I then went to my old team at Goldman and said, how do I bet lithium and copper adoption? And they said, you have two options. One, give your money to a private equity fund, lock it up for 10 years. You'll make a lot of money, but it's going to be away for a long time. And here's the execution risks. Or two, look at the baskets of publicly traded EV companies or miners and, build baskets of that. And then when you look at who those players are, you have Rivian, who, if they don't raise that $1.5 billion that they're in the market for, is really out of business. You have the other car company that announced recently they produced 3 total vehicles in Q4. These are startups. And then you have the mining infrastructure, which is people that have acquired reserves of this stuff, but have no track record of extracting it or producing it or processing it. And so those are startups as well. And then let's zoom out a layer deeper. Tesla, who I think is a brilliant, important company for our global future and love sincerely. But, Tesla holders, $1.2 trillion of market cap last year at one point, lost 80% market value in their stock last year because Elon got distracted and bought Twitter and dumped $26 billion of shares. None of those have anything to do with the fact that Tesla's production was up, efficiencies were up, grew as a business brilliantly, but traded down because, markets are voting measures, not value measures. But the inverse of that is, let's look at the price of copper and lithium and nickel and cobalt last year, because that's directly tied to the demand curve for the base layer. And so lithium's up 180% in the same calendar year that Tesla's down 80%. So I think you had $1.2 trillion worth of investors sitting with Tesla in their portfolios saying, I was right. EV adoption's way up, political support's way up, and I lost 80% of my money. Like, why? I had the wrong bet on. And so enter, our business Charge, which, I'm not here to shill, but at the same time, like, that's why we built it, is because that's the purest way to play that.
The story of how because when we met too, John and I had come to the same realization, and we kind of went down the opposite path, that the private equity, that there's so much you can do on the public side, and then otherwise you have to buy mines. So I'm fascinated how you figured out how to put together this ETF.
Well, I was lucky, post SPAC and post Goldman, I was doing private investing and invested in and helped grow a business called 55 IP that was sold to JP Morgan, that created tax loss harvesting technology for ETFs. People don't appreciate that.
Yeah.
There are no wash sale rules. If you sell an S&P 500 State Street product and buy an S&P 500 BlackRock product, those are considered separate securities. And so we built this automation technology that allowed for people to kind of sell one and buy the other, harvest losses, and it was quite smart. I can't take credit for its ideation, more so its implementation. And JP Morgan bought it to layer it across all their portfolios, which was a very smart acquisition by them. Anyway, that brought me into the world of ETFs and really educated me on it. Lee Cranefist was one of the founders of that company, who's credited with being the founder of iShares. And I really learned a lot from he and Vinay Nair, who's really the brains behind that whole vision. And that alerted me to utilizing ETFs as portfolio construction tools. I then was living in Miami and was lucky to sit with some of David Tepper's guys who were trading true global macro on a day-to-day basis, and recognized that over the water cooler, we would talk about global macro themes, and they would say, here's how to play that. You buy this ETF, you short these 4 components of the ETF, and it gives you pure exposure to the thesis you actually sought in the first place. And now, fast forward to last year, I've done a lot in blockchain, and I was vice chairman of a firm that had Bitcoin's first NASDAQ ETF. And so watching that whole process of come to be, the way that got, through the wickets, if you will, is that it is a basket of futures contracts on Bitcoin. And I'll just say that, what's an interesting conversation with the SEC is, how do you deny a product that is a basket of already approved products? Yeah. Right. It's like I used to say to anyone that would listen, it's like going to Whole Foods, making a salad at the salad bar, getting to the checkout counter and them saying, I won't allow you to buy that. And he said, what do you mean? I took components that you've already approved, that are already on your shelves, and just, basket them up. Then the Bitcoin ETF and all futures based ETFs, really leverage the same thesis, which is, this is a basket of highly regulated trading vehicles. And based on their depth and liquidity, we can use futures contracts to give investors participation in that curve and in that demand. And by the way, sadly, I am someone that's invested quite broadly. And you would think that I'm a 1%er and someone that has access to investment products. I, as a private investor, cannot trade futures. Unless I put $10 million of collateral up in cash against those futures trades, I'm restricted from doing that. And that's my old employees at Goldman telling me no. It's not like I'm, calling an 800 number. So it's very hard for retail investors to pull that off. Now we launched this product that is an ETF wrapper, and we do the hard work. We hired the guy that ran commodities trading at ProShares for 9 years to be our lead portfolio manager, just to make sure that that part is tight as a drum. And now investors can just buy a New York Stock Exchange listed deal, and we do the hard work behind the scenes of wrapping it up for them and maneuvering it, such that they participate in that curve. And one more dynamic there that's important to investors, I think, forget about us, is these chemical compositions of the underlying batteries are changing right under our nose.
Even just the Tesla's Investor Day showed that.
They did. And they talk about, different use cases. The US Postal Service trucks that go 70 miles a day, stop every 50 feet, and charge at the same location every night, need a different type of battery than the 0 to 60 in 2 seconds, 400 miles of range Tesla. And so those are different. Basically, the way that breaks down is the chemical compositions of the underlying batteries necessary for those different use cases have different ratios of lithium, nickel, cobalt, manganese, whatever it might be. And so what we do is we weight our portfolios based on those different demand drivers and the different use cases of volume, based on what that drives as per kilogram demand of the underlying commodity because, and we do it actively, we change the portfolios at least monthly because that's a moving needle. And the West has not been won on what the underlying battery technologies are going to be. And, battery energy storage systems from municipalities leverage different chemical compositions than, Rivian, Amazon delivery trucks. And so we have to weigh all those things. And actually we contemplate over 1,000 different use cases in our models to make those decisions.
That's utterly fascinating. So it's not like you just figured out the 7 companies that do this and put it into an ETF. Yeah.
Well, I can't take credit for that because I partnered with the Energy Mineral Group co-founders, John Raymond and John Calvert, who have deployed over $25 billion privately into the space. They live and breathe the supply chain. And so I'll speak with them in our investment committee meetings and say, the world thinks X supply is coming in the market this quarter and Y demand is occurring from these sources. And they'll sometimes laugh at me and say, those guys have no chance of coming online in the next 90 days. They ran out of money. They lost their permit. And we in the public sphere don't know that. And so that's part of our kind of proprietary look under the hood of when is supply hitting the market and how. Forget about whether or not China shuts off our access to supply. It's just what is the pipeline. And this company has said that they're going to make 3 million cars next quarter. This company says they're going to deliver 3 million tons of lithium next quarter. And are those accurate assumptions the market is making for the underlying price activity?
Yeah, I would encourage anybody, if you're interested in this space, the insight page on your website is really enlightening. You guys produce a lot of really good research. Yeah.
Thank you. We spend a lot of time on research and think it's comical that some people manage this passively. You can't just set it and forget it. This thing is fast moving, and we've moved our portfolio 25% in the first 90 days of the year just to show, how fast these things move.
Just knowing, being kind of part of this, the last 90 days has been transformational in terms of the entire space, both pricing and also, the kind of the trajectory, especially kind of led by China. So how do you, not the next 10 years, but like, what's the landscape? How's the next couple of years going to play out?
Well, I think you actually have to think about it in 10-year increments.
I agree. Yeah. But
unfortunately, it's hard to predict in the short term. I always say that if you ask me where these prices are going to be in 3 years, 5 years, 7 years, 10 years, I am very confident in the answer I could give you in terms of where they are in relation to today. If you ask me where they're going to be in the next 3 days, that is just a whipsaw. And so you need to expect volatility when you come to this. I had a call with a very brilliant head of a state pension fund yesterday, who I've known for a long time and love and trust. And he said, he bought it while we were on the phone, and he put it in his granddaughter's 529 plan.
Yeah.
And he said, I'm putting this in, this is paying for my granddaughter's education. She's going to college on this trade 17 years from now. I just, if you're trading this for 17 days from now, I'd be more nervous, but I would tell you a year and 7 months from now, we're quite confident that the world has not figured out how much demand there is and how much supply there is. And that juxtaposition is going to create for some great price activity in at least those core metals. Yeah,
I totally agree that, what's going on in the world this week is a little volatile, but this is kind of an uncorrelated asset to your normal financial product, because what makes it up is national security. It's environmental. It's also just what the consumer wants.
Well, so where do people go in times of duress like we're in, right? There was a lot of talk since the Silicon Valley Bank stuff about flight to gold, flight to silver. Well, what does that really mean? Does that mean investors are taking a view that the world will be consuming more gold iPhones in 2025? No, what they're doing is they're moving into fixed or finite supply assets that they view are going to have more demand. Enter Bitcoin, enter silver, enter gold, but no one talks about copper, nickel, lithium, cobalt. Those are fixed / volatile supply assets with massive demand curves. And so, yes, there's a flight to, some of these assets that are more quote unquote secure. I think that the underlying definition of that is, are they volatile supply? Do you want to hold US dollars when the government has proven willingness to print US dollars? Or do you want to hold gold when the government can't print gold? Do you want to hold lithium when you can't create more lithium than the world has to give us? And that's why I think, there is a flight to quality. And I believe that our commodities are quality.
And there's a big difference between commodities that have real economic demand for a productive asset than gold demand, which is really just a question of confidence and faith in that as an alternative store of value.
Yeah, and Bob, why we zoom out and talk about solar and wind as important as EV, there's over $4 trillion committed by global governments to carbon neutrality and going green, which, by the way, is a greater figure than every human endeavor ever undertaken. Yeah. We have a piece of research on our website about this that the World Bank actually put out, which is you can line up the Great Wall of China, the US interstate highway system. It doesn't even come close to the amount of money committed to going green and green technologies. And so the commitment of those global governments to that fact is staggering. And so when you pair that with those assets that we reference, it's an economic setup like nothing I've ever seen.
Well, there are two, general risks that come to mind. One would
only two.
Yeah, maybe a lot more. But I'm curious about recycling, and I'm also curious about high prices curing high prices. So if China were just to stop, what would cause this tsunami of demand to falter? Might just be actually what we're talking about, which is super high prices. How do we think about those two risks?
And Tesla did a great job at their investor day of focusing everyone on operating efficiencies and how they're continuing to find ways to make cars cheaper. Because at the end of the day, if it costs Tesla $58,000 to build a car, they can't sell it for less than 60, right? So we need them able to produce these cars as cheap as possible. With that comes operating efficiencies. They're getting better at how to make them faster, sooner, whatever it might be. Which is, by the way, why a lot of people think GM and Ford, and the mainline legacy players are the way to play this deal, because they have the supply chains locked, they have the distribution locked, and they have the servicing system locked, whereas any other newco needs to just start that from scratch, which is a whole nother, a rabbit hole. But we look at all those things, and it brings us, pause and nervous. What is the greatest risk to Tesla's ability in the future to deliver cars at affordable prices so that the masses can consume them? It's the price of the core commodities they need to go out and acquire, because you can gamify operational efficiencies. You can create tax incentives for labor. You can create tax incentives for, onshore production and speed. You cannot gamify the price of the commodities that they have to go out into the market and acquire to build the batteries required to move these things around. And the reason why we zoom out to solar and wind as well is because just as important to that is every solar panel, which, by the way, solar and wind are intermittent supplies of energy. Oil and gas, you light a switch, you light the fire and you create energy. You throw coil on the fire and it pushes out steam. I mean, this is how we've known this to work for 100 years. With these intermittent supplies of solar and wind and hydro, all of those require a pair with a battery to harness energy in times of surplus and deploy energies in times of need. And so the demand for copper, driven by any and all of what I just said, all charging infrastructure to plug these cars into the wall and to plug these solar panels into the grid and wind turbines into the storage systems, that's just all pure copper demand. And we think, copper is our majority position in the portfolio right now, because we just think the world hasn't thought that piece through. Everyone wants to talk about, lithium demand, for the battery technologies going up. It is, and lithium is the core component of all of this, but copper is something you can't gamify. Copper is also something you can recycle. And nickel is an important component of batteries and their recyclability. But we think that, recyclability isn't necessarily that, my Tesla will use a recycled battery, as much as the battery that comes out of my Tesla in 10 years when its productivity has fallen off is going to go into a different use case, right? You're going to pop my Tesla battery out and pop it into a cheaper vehicle, because that cheaper vehicle doesn't need to go 0 to 60. It doesn't need to go 400 miles. It might go 200 miles. And so that's kind of the recyclability angle, is that there's other use cases of these batteries. Another thing we talk about with investors, Bob, is oscillation. So what oscillation is if I plug my iPhone in every night and charge it up to 100 and then wear it down to 1% every day and do that, a year from now, that phone's not going to work very well. Whereas if I kept the battery of my iPhone between 65 and 75% always, it allowed me to get 8 times as much usage out of that battery. Now that's relevant when you're using municipal vehicles, when you're using power sources that are constantly plugged into a grid and not needed to be remote. I can keep my oscillation ranges tighter, and I can expand the longevity and use of that battery, or upcycle or recycle them into use cases that are constant supply and are able to tighten those oscillation curves, so that my iPhone, I'm going to throw it out in a year and it's $800 and I'm okay with that. But when I buy an $80,000 Tesla, I can't throw it out in a year. I can't afford to do that. But when I buy an $80 million battery energy storage system for a municipality as a backup to the grid, I don't want to throw that thing out for a long time. And so I need to manage the oscillation curves and allow for the longevity of that to remain. That doesn't have any negative impact on what we perceive to be the demand curves for these assets. And it's not about whether or not your uncle shows up next Thanksgiving in a Tesla, to dinner. It's more so about, as Brendan talked about, is your weed whacker going to have a battery instead of a ripcord?
Yeah, well, in DC, 6 months ago, we mandated that all weed whackers have to be battery powered.
I think that was around when they also legalized mushrooms. That was probably
yeah, we finally got the mushrooms. We've had weed for a while, but we got our mushrooms.
That was in their infinite wisdom of just forcing that upon people. But that's a good, comment about the fact that these global governments are forcing adoption. They're not just incenting adoption by saying, I'll give you a tax break. They're pushing it into the system. And the only chance we have of coming close to these carbon neutral goals is doing so. And we're not, I laugh, and you guys can as well from DC and the perch that you have. These people standing on their soapbox saying we're going carbon neutral by 2030 and 2035, which is 8 years after I'll be out of office. No effing chance.
Yeah. I mean, but also we're trying to, reduce our oil output while we're begging Saudi Arabia to pump more, but it all goes into the same world. It doesn't really matter where it comes out.
That's why you hear, there was some terminology in the market this past month was what is going to be the lithium OPEC?
That's a great point.
And can the U.S. participate in the development of a Latin American? It was sad for me because they called it the cartel, which I think was
for
an
Latin
unfortunate
America,
choice of words.
Yeah.
But really, we need an OPEC of non-Chinese supply chains that decide to get together, fund innovation, and really better feed the global demand for this deal, because we are so behind. And if we depend on China, the DRC, non-democratic sources for this, with governments that don't have sound relations with the Western world, that's a problem. Last Friday, you saw the head of the EU come to the White House and meet with Biden about ensuring that they can align on sharing incentive from the Inflation Reduction Act for European-based businesses, so that the VWs of the world don't shut down German plants to build US plants. Instead, they keep the German plant, they build the US plant, and they don't further invest in the governments that aren't supportive of that, maturation curve. This is happening, and once, your listeners and viewers are better paying attention to it, it's ubiquitous. You can't turn on the TV and not see it. You can't read the newspaper and not catch it. Copper, lithium, nickel, cobalt, the rare earths, that is our future, and we require them for any capacity of going green or staying green. And we need to wake up to that fact and start to make movements to not only participate in that future price growth, but secure those supplies.
And going back to your point in Africa, I mean, I think this battle is going to be fought over Africa, but China is so far ahead of us because we just don't have the supply chain to, even if we convinced every nation in Africa to start digging up stuff, we couldn't do anything with it because we can't process it now. And China's so far ahead of us on that curve that we have to start getting our own infrastructure in place before we can even think about starting to combat China in Africa.
As well as those nations in Africa, quite sadly, are not E, S, nor G.
No.
So all of this dependence on supply chain for, there's a parallel with green technologies and going green and ESG, but you don't want to look under the hood and realize what it takes to do this work. And people have to be a little bit more cognizant of that, but also accepting of the fact that, yes, this might be taxing of the environment, but it creates a rechargeable energy source for our future. It is the perfect scenario for one step backwards for two steps forward.
Yeah.
And short-sighted governments haven't shown willingness to take that one step back because they'll be out of office for the two steps forward.
No,
and
you're right.
Non-democratic governments have.
And so when you do mining, when you start dig things up, when you go deep enough, you get radioactive issues. So there is environmental issues that can't be denied, but there is ways to do it safely. But even when you do it safely, it still takes years to get these things set up. So if every day that we don't start that process is a 2-year lag that we're behind.
Well, I'll blow it out for you. In typical Washington fashion, the incentives of the Inflation Reduction Act are being exploited by people building battery production plants, and those take 2 years to build. Well, lithium extraction and processing, cobalt, copper, nickel extraction and processing takes 8 to 12 years.
Yeah.
And so we're going to have a whole bunch of quiet and empty battery facilities that aren't going to have enough of the commodities to go into operation, benefiting from huge government stimulus because, that curve hasn't matched. And so 8 years from now, we'll probably have enough production facilities, but they'll be 6 years old and haven't been in operation yet.
Yeah.
Because people sprinted to build it ahead of having the ability to do it. Or that's going to drive, increase in demand for the underlyings that the market is not contemplating yet because our capacities are not being matched.
Are there areas within the U.S. government where there are people that are focusing on this problem to change policy? It just seems that this is too obvious an issue that we've all kind of heard about in the background, but nobody at the highest levels are talking about it. Are there efforts that seem to have some promise anywhere within the government to organize a resistance to Chinese control over these assets?
It's being spoken of, and people are more and more aware of it. They need to be. I think the Inflation Reduction Act was a good first step, and I think this issue is one of the first issues we've had truly as a democracy that is bipartisan, because you can't find anyone on either side of the aisle that says we should not have green technology, even if they're the most pro coal, oil, whatever. They understand that this is where it's going, and that's why I say the term expansion, not transition, because we're not transitioning out of oil and gas. We're not killing off coal. We do also need those things. We are hoping to wean ourselves off of dependence on Saudi Arabia and Russia for those things, I would hope. But, the juxtaposition in the current administration is troubling in that they are saying all the right things and wanting to go green and wanting all these ESG policies implemented, which are good for our world and good for our independence. But again, not showing willingness to make the sacrifices on even in North America, or even on a time zone basis in a Latin American supply chain to do the hard work and to set this up, for success in the long term. And that comes back to them, making decisions on 2 and 4 year election cycles instead of taking a 10-year view or a 100-year view on what needs to happen for this to work out.
Yeah, we've had I've been very impressed with the Commerce Department. We've had a lot of good meetings with them, but there's only so much you can do as a government. You can incentivize, and we do have some means to lend money, but there's a lot of hurdles to get through. And one of them is a lot of times you have to have like a 3 to 5 year track record. So you and I
Right.
could start a company tomorrow that's going to, gobble up everything, and we could have unlimited funding, but we won't. It's going to take 5 years to get money from the government.
Right. Typical government policy that says this is an innovative thing that no one's ever done before, but you need a 5-year track record.
Yeah, exactly. Yeah. You understand how it all happens. That's the kind of the point of bureaucracy. But when you realize that this is a national security issue, you have to be a little more flexible.
Well, and that terminology is also something to track. When people label these assets strategic,
Yep.
or when people drag them into the bucket of national security, it opens up the government's ability to do things outside of the traditional scope. And you've seen global governments do that, and I anticipate you'll see the U.S. government follow.
Yeah. The European, the EU is putting, hundreds of billions of dollars behind this, and they started, 4 years ago.
So here's some crazy statistic. By 2040, 91 countries representing 91% of global GDP have represented that they'll be carbon neutral. 83% have said by 2030. It is scientifically impossible for that to be accurate.
Yeah, isn't it?
Not
it's
enough.
2023. This year's 2023, right? So that's 7
Yeah.
years away. a year
enough,
goes like this.
you
People
know.
don't realize how quick a year is,
Yeah. Well, 2030 conveniently happens to be outside of the 4 and 8 year election cycle.
Exactly.
But the world just doesn't have enough copper, lithium, nickel, or cobalt to satiate that. It's
Right.
scientifically impossible. So it sounds good, and people feel good when they read it on the headlines. But government needs to show that they're willing to swallow that hard pill to see this become a reality.
Asteroid mining.
I have a friend that is part of a company that does asteroid mining, and he's admitted that we're decades away from actually mining asteroids.
But you know what? Hey, the Chinese are probably working on it, and they're working on nuclear. Like, we got to think in longer terms, and we can't just say, "Oh, that's not happening for a decade." If it might happen in a decade, we need to focus on that now, or else we're going to be in the same situation then that we are now, and we missed the trick.
100% agree.
Well, it's scary too when you look in, the shale plays and how much negativity those have attracted, and how people aren't willing to drill onshore, and how much even just recently in Alaska there was negativity about that. Those things are directly, those are national security issues. Either we need to have our own sources of energy onshore that we can depend on, or we will not be innovating, and we will not be producing, and we will be buying everything from those other governments. If China has this supply and processing capacity, and they can price fix those commodities, they can produce vehicles cheaper than we can, which means we will be driving Chinese vehicles because we will be unwilling to pay $20,000 more for a US vehicle.
Exactly.
And we need to be okay with that, or we need to change something.
No, but you're right. I think the Biden administration kind of quietly approved that permit in Alaska, but they did it going against a lot what the Biden campaigned on. But once you're president, you realize that we just need it. I can be hypocritical, but it doesn't matter. This has to happen.
Yeah, and that's why it's refreshing to hear politicians stand up and say, "Not me. When I get in there, I'm going to do this." But the realities of being in that White House are different than being on the campaign trail. And it would be refreshing for a politician to stand up there and say, I'm running as a one-term president, and I'm going to do all the things that no one's willing to do for the next 4 years, and you're going to absolutely hate me. But 25 years from now, you're going to celebrate me as the best president in U.S. history.
Yeah.
I'll bet you that the GOP candidates, somebody's going to be making this an issue.
Oh yeah, for sure. This will be a huge topic in the election cycle of 2024, and we are prepared for it.
Yeah, I'll be your chief of staff. Well, this has been amazing. I really appreciate you taking time with us, and I also really appreciate what you're doing. I think it's really important for the future of the nation.
Oh, well, you know, as Lloyd Blankfein once said, we're doing God's work.
It's okay to make a little money and also, you know,
no, this is an important
contribute
thing,
to society.
yeah, I have been lucky to do some interesting things in my career. Nothing has been as big as this. I'll also, you know, want to say with sincerity, a lot of my refinement of and understanding of the issues here is with thanks to the content that you guys put out. I read your daily emails. I love them. I love the content you're putting out with these podcasts, and I'm thankful for it as something that helps me understand how the worlds work. Very thankful that we met many years ago, and very thankful for your contribution to, you know, my understanding of global markets.
Yeah, we met. You're having coffee with Gary, and Gary's kind of like an orbit among himself. You're just kind of drawn to him. So when he makes it into town, you know that Gary's here.
It was amazing that we did, and you know, that day Gary and I met with Jay Clayton and talked about Bitcoin ETF, and that was a long time before that happened, but it was a fascinating day for me, and I'll always
but you got that done. Yeah.
Well, thank you very much. Speaking of Bitcoin ETFs, and we've talked about the futures, what do you think about what's going on if the Bitcoin ETF prospects and the Grayscale lawsuit?
Yeah, I don't know enough about that lawsuit to comment, as much as I'll say it was sad for me to see them come in and shut down the banking infrastructure that has supported crypto. And it's just a way for them to, you know, there was a great quote where someone said, let no good crisis go to waste. They were like just waiting for something to happen, say, oh, Silicon Valley Bank, hey, who else should we throw in? Hey, grab those crypto banks, shut them down quick. Okay, cool. We've consolidated the people that aren't playing nice. All that does is just drive things to a more decentral world, which I still believe is more and more important and relevant. And I think, you know, Bitcoin and Ethereum are great investments still. And I personally am exposed massively to them, and will continue to be. And that's not a statement on government. It's not a statement on economy. It's just a statement on, you know, pure, true innovation and the ability for our world to have a decentralized settlement layer, and not be dependent on, you know, a Silicon Valley bank being closed down for 72 hours while they figure out their mess, and me just hoping my money's there. You know, the world deserves 24/7 liquidity, you know, and that was a big attribute of us forming this ETF as well, is I don't want to be locked up for 10 years to participate in this story. I want to be in a daily tradable asset, and Bitcoin is, and Ethereum and the, you know, digital assets are 24/7 liquid, which causes some truth serum. And I continue to be passionate about that as well.
That's right. Well, Will, thank you very much. It's great seeing you, and it's great to hear about this new venture you've got.
I always enjoy seeing you guys. Thanks for your time.